Good afternoon and welcome to our Financial Advisor Forum. I'm Greg Greenberg from The Street, and Sandy Villere from the 5-star rated Villere Balanced Fund is here to offer some of his favorite stocks. Welcome, Sandy.
Thanks for having me, Greg.
All right, let's start off with Sotheby's, ticker BID. Stock's up 50% this year. Dan Loeb is agitating. Why do you want to stick with it?
So this is a 250-year-old company that basically is a duopoly with Christie's, right? So it's not a demand story, it's a supply story. So as long as you have the 4 Ds, death, debt, divorce, and discretion, then art tends to come to the surface. Last week on Tuesday, you saw Christie's have a phenomenal auction. I think it was 40% higher than the previous record, about $690 million. And so that just shows that there's a lot of supply. Like if you're an owner of art, maybe it'll come to the surface now because you think there might be a good price for it. And then yesterday, Sotheby's had a good bid, also exceeding some records for them. So it's a good time to be an art buyer.
The art market certainly is hot, even without Stevie Cohen. Let's talk about another stock, Sanchez Energy. This stock is up 46% year to date. Why do you want to stick with this one?
So I like Sanchez a lot. These guys only went public about 2 years ago. So they've got about 140,000 acres in the Eagleford Shale. It's about 77% oil, which we really like. And then they bought about 43,000 acres in the Tuscaloosa Marine Shale, the TMS, that I think is like a call option to the story. They're watching Goodrich Petroleum do their thing and perform sort of a science experiment while they sit there and they're only going to spend about $7 or $8 million out of a $40 million out of a $600 million CapEx budget for 2014. So I think it's going to work out really well for investors.
All right, your next one, not doing so well as of late, Flowers Foods. Last week came out with earnings, missed the street guidance. Why they miss and why do you want to own the stock?
So I'm actually having dinner with these guys on Monday. They're coming down to New Orleans, so we're gonna discuss it in a lot of detail.
Are you gonna eat Wonder Bread with them and Twinkies while you're dining with them?
I think that's exactly what we ought to do. Yeah, for sure. So this is one where they have so much volume running through there that they haven't quite gotten it fixed. Remember when Hostess went bankrupt, these guys were able to buy 5 other bread brands. They have the #1 bread brand in the country in Nature's Own, and now they're able to buy Wonder Bread and 4 other bread brands, but they're also able to buy about 36 different warehouse depots, 20 different bakeries, and they're going to catapult themselves into this growth profile that they haven't quite been able to right-size yet, but the future is very bright for Flowers Foods.
All right, maybe we'll make some bread on that particular stock.
Yeah.
Let's finish off with Conn's. This is a retailer, up 100% year to date. That has a very high short position in it. About 25% of the shares are held in short accounts. So there's a squeeze there. Why do you like the stock? Is it the fundamentals or you just want to ride that short up?
No, I think fundamentally these guys are doing great. Remember, this is kind of a transition from what they were into a growth story. So they've only got about 70 stores. They're 90% in Texas, and they're about a 75-year-old company. So they went from a specialty retailer of things like electronics and appliances to mattresses, bedding, and furniture that are not only higher ticket items, but also more higher margin items. So that's really working well as it comes through. I think they're going to have a big sale going into Christmas. I think it's going to work out well. But even over the next 3 to 5 to 7 years, I think they can go from 70 stores to about 300 stores. And the real secret of this is Conn Credit. So you walk into a Sears or a Best Buy and you try to get a credit card, and many people don't have perfect credit and can't get that item. So they go into Conn Credit. If they're too low, Conn's will turn them over to a rent-to-own option. If they're too high, they'll turn them over to GE Credit. But if they're in that sweet spot for Conn's, then they'll put them on their own in-house credit option, and it's very profitable to Conn's at the tune of 23% when they make those loans. So it's a good one.
All right, thanks a lot, Sandy. And thank you for watching the Street's Financial Advisor Forum. From New York, I'm Greg Greenberg.